5 o'clock, June 5th, 2013. I've been watching interest rates for 35 years and TBT for several years because it's a double bet on the direction of bonds. It's come way down, and then they had a 4-for-1 split. It's been sitting there in the 60s for quite a long time. And a lot to digest with the direction of interest rates. You've got the Fed with this $85 billion a month. You got China with, holding over $2 trillion of U.S. financial assets, and many of that in long-term treasuries. I remember back at Harvard when the Nikkei was about 40,000, and everything we were studying Japan, how they had their factories. I remember with Shapiro, where they would just turn off the lights. They were so advanced in manufacturing. And their stock market started heading south, and it still hasn't recovered. And Japan's interest rates are a whole nother realm in and of themselves, these low rates. And now, a quick from the hip summary, but having rates that are so low that they're less than inflation, and so that's even with the super money printing in Japan, rates are going up because investors aren't buying it. And that'll eventually happen here in the U.S. And so I know don't have my suit on, and I haven't posted for, maybe a month or more. But I've been watching TBT for years, and so I'm making my call right now. Right here, right now. Close to the Rocky Mountains. In fact, I'm looking at them right now. The snow's coming off. But like Fisher said in Toronto yesterday, the 30-year bond rally's over. Fisher evidently isn't a voting member of the Fed. I guess he's at the Fed in Dallas. And, you have to look at what the Fed's going to do, and you have to understand the central bank and the Federal Reserve. And, it's hard to understand all that. It can be really complicated, but it is a fiat money system. It's fake, and it's a belief in a false system, in a Babylonian system. But I know the traders, and there's trillions of dollars. It's funny, but Bill Gross from PIMCO, he went to Los Altos High School. And now that I think about it, I remember seeing him on the cross-country team. I think he graduated a year before me, Bill Gross from PIMCO. Weird. And now he's down in La Jolla, Mr. Bond King, managing trillions of dollars. And I think he's been bearish on bonds for a year or so. But, when the Fed's pumping this $85 billion, and the banks are just holding it, and it's not really helping out the economy. And if you think about it, people think the economy hasn't crashed. I mean, for it to be as weak and anemic as it is, with $85 billion of stimulus a month. Saw a good chart today on Bloomberg. Bloomberg has some good financial info. Even though he wants to restrict your Diet Coke or Coke intake. Can't believe Bloomberg and his control freak attitude. But anyway, I like some of the shows on Bloomberg because at least you can watch them for a few minutes without interruptions from TD America Trade, etc., etc. But they've got some good information on there. Anyway, I kind of went off there with Bloomberg in New York and everything. But back to TBT and bond sales. I think TBT is going to have a massive move upward, and it's the whole capital markets thing is so esoteric. I was watching actually Bloomberg has some good video stuff today. I was watching a trader, a guy that didn't go to one of the best schools, but he wrote a book called The Buy Side about how corrupt Wall Street is, or like how it got him into drinking and all the crap and all the stuff. And that's why I didn't go there, because I probably would have been tempted to be a master of the universe and fall into that trap of all that stuff. And you're just basically in a Babylonian fake world. But back to that world. We'll go past Twin Peaks. Let's go way out in the universe and look down. Okay, so China's got $2 trillion of U.S. treasuries, let's say. Roughly $2 trillion. And interest rates right now on the 10-year, about a little over 2%. On the 30-year, they're a little over 3%, which to us, I guess I feel a little bit old now. But back when the Treasuries, the long bond was at 14% when I got out of BYU in 1981, 3.5% was just like, oh my gosh, it's so low. Well, I think in the next 24 months, in fact, I'll make this is one of my big predictions. Probably this is bigger than gold because it'll affect everybody on the planet. Bond yields will double on the 30-year bond in the next 2 years. Double. I've been watching this for years. I'm finally going to say it. Bond yields will double and more. In the next 3 years, they'll triple. So, Manoftruth, 2013, the 30-year bond, the yield on the 30-year bond will triple in the next 3 years, which means it'll be over 9%. So I predict here and now, this is a big prediction. We'll see how long the internet lasts, and we'll see how long things go on, because I think the grid's going to go down. I'm extremely bearish. People massively bearish. But interest rates in 36 months, if they're trading, will be over 10%. Okay? And I'm being super conservative. I think they could be over 10% in 24 months. Because when they start to go, and you got the Chinese trying to get out of these, $2 trillion worth of U.S. securities, and other people going, oh my gosh, get me out of here. Because, for the layman to understand this, let's say, whatever, if you were a millionaire back in 1970, you were something. You could buy a pimpin' house in Los Altos Hills for 65, 75 grand. You couldn't even find a house in Los Altos for over 100. Now you can't find a house in Los Altos for under $1 million. And a POS in Palo Alto will cost you like $800,000, $900,000. Where you can have a ping pong table and think you're going to start a new high-tech firm like Facebook or something like that. And those guys started at one of those crappy little Eichler homes, which were designed after chicken coops. Anyway, that's something else there. But as interest rates triple in the next 3 years, it obviously crush the housing market. It'll crush the stock market. It'll crush the little guy. And but let's say at $1 million, okay? $1 million, which I said was a lot back then. But you have $1 million right now. And you were stupid enough or foolish enough, because you don't think real big, and you've been fooled by Ben Bernanke and his $85 billion stimulus and the multi-trillion-dollar expansion of the Federal Reserve balance sheet, which is fiat money, with this thing passed December 27th at midnight, on Jekyll Island, 1913. Anniversary year here. Stuff's going to happen. Got $1 million, and you're earning your big 3% on it. So you got $1 million invested in, quote, the riskless rate. The U.S. government. Oh my gosh, that is so inculcated into your brain. The riskless rate. You're kidding me. It's just I'll never fit in, because I don't buy the conventional wisdom. Never have. More people get it now. Bilderberger's going on. All that stuff's going on. But there's stuff that's way bigger than that. So, got $1 million in 30-year bonds, and so you're earning a little over $30,000 a year on your $1 million. You can't even live and retire on $30,000 a year. Most people can't. You could have $1 million invested in, quote, the riskless rate, the United States 30-year bond, and can't even live on it. So what's going to happen? Well, in the next, when rates double, your $1 million will be worth $500,000. And when they triple, your $1 million will be worth $333,000. So the people that are holding, and the hedge funds that are holding, and the Chinese that are holding, okay, that are holding their $2 trillion in long-term bonds will get crushed. So what are they going to do? They're going to start dumping it like crazy. And you're going to see TBT go over 70, 80, 100, 120, 150. You're going to see TBT go over 200. So this is the call. TBT will double and triple in the next 1 and 2 years. This is the call. Man of Truth. Ciao.